HPCL is the biggest gainer within the Nifty. So let's speak and welcome on board Mr. M.K. Surana, the CMD at HPCL. Mr. Surana, can you hear me clearly? Morning, sir.
Yeah, good morning to you.
Good morning. Mr. Surana, the Oil Ministry recently shared that there has been a sharp surge in usage of LPG as kitchen fuel because of the expansion in Ujjwala Yojna. How is that improving your LPG volumes at HPCL?
Yeah, LPG government has been having a recent push on making LPG as the cooking medium, especially in the areas where so far it was not being used, especially in the rural areas, in the below poverty line people, etc. And that has definitely given a boost to the LPG volume. The LPG growth had been plus of 8% in the April to February months. In fact, there was originally a plan to issue 3 crore connections when the Prime Minister announced the scheme on 1st of May in 2016. But now that target has also been increased to 8 crore because we already crossed that 3.5 crore connections have already been given. So this should bring good growth because the people who have originally taken the cylinders in the PMUY, now they are also coming for refill. So there should be a good growth on the LPG volumes. And we expect a growth of 8 to 10% in that.
Oh, that's good to hear. Also, we understand that OMCs put together, Mr. Surana, adding up to about 33,000 crore rupees in LPG infrastructure in order to aid the plan, be it bottling or imports or any other route. How much is HPCL in specific planning to spend?
Actually, the LPG infrastructure is being improved in 3 ways in HPCL. First thing is for transportation of LPG fuel through the most economic and the environmental friendly manner, we are putting up LPG pipelines. Last year we have commissioned a line from Mangalore, Hassan, Bangalore for transportation of LPG. That was the first LPG pipeline for HPCL. It has already been commissioned. This year we are putting up another line from Uran to Chakan to transport LPG. In addition, we are putting 6 new LPG plants in various parts of the country. We are also augmenting our existing LPG plants by adding additional carousels. And this, in very shortly, we are going to commission the one of another LPG plant which is already commissioned, which will have the biggest carousel. There is a 72 head carousels. So, commensurate with the increasing demand, the infrastructure is being augmented by all the oil companies, and so is HPCL.
Mr. Surana, hi there, Avan joining in now. Reports also indicate that the government is planning a comprehensive round of city gas distribution bidding. Would you be keen in participating since you're also aiming to become an integrated end-to-end gas player?
Yeah, actually, HPCL has been participating in the city gas distribution bidding rounds, which PNGRB announced from time to time. We already have got licenses for few of the cities, like and that we are operating through our joint venture companies. Like we have got a city gas distribution license for Hyderabad, for Indore, for Ujjain, East Godavari, West Godavari, in Ahmedabad. Recently we have also been successful in another 3 cities. So we are also equally participating in the bidding rounds which are coming for city gas distribution, and we will be looking for that because this is another area which is coming up, prospective and the future.
Okay, interesting to know that. We'd love to catch up with you later as well to know the progress on the bids for the same. But let's also talk about your refining margins. They've been flat this quarter, but experts seem to suggest that refining will continue to remain soft in the medium term. What's your outlook?
Refinery margins had been good in the recent past, in last 1 year or so, depending on the inventory gains or losses based on the prices of crude and the products. Now, in last Q3, the margins were healthy, GRMs were healthy because of the lower crude prices and the good cracks. As you know, the refinery margins depends on crude price, cracks, the inventory gains or loss depending on the variation in the prices, and the configuration and the operational efficiencies of the individual refineries. HPCL refineries have been operating above 100% capacities for recent years, and that we will continue to do. We have taken a lot of measures to reduce our energy consumptions, to bring more energy efficiencies, and also some of the things to improve the distillate yields. As far as the crude prices are concerned, they are more stable than what they were. Of course, there are some variation because of the crude inventories, the production in US, the compliance level of OPEC. But overall, this has been reasonably stable in the recent times, between $62 to $68, and we expect that through March it should be the case. Now in April onwards, there will be some refineries which will come back on stream, which are on shutdown right now in Asian countries. And as far as cracks are concerned, the HSD cracks had been good in recent time because of the increased Asian demands. Gasoline cracks were slightly milder because of the inventories, built up of inventories. But we expect a similar trend for good HSD cracks, and HSD is a big volume. So we expect healthy GRMs in the quarter Q4 as well.
Oh yeah, considering, you know, the crude prices, the way they've been panning out, you're definitely in a sweet spot. We understand that. But in lieu of, you know, the way business is panning out, tell me, what about your capacity expansion plans? Because, you know, one of the foreign brokerages has talked about believes that your return ratios may actually come under pressure going forward because of the massive capex outlay. Would you agree with that?
No. Actually, this is true that we have got a big expansion plan, but there are two aspects of it. There are certain projects which are on HPCL, there are certain projects which are on joint ventures. Like our Rajasthan refinery is in joint venture. If we go for a petrochemical complex, that is for a joint venture. And when we are on joint ventures, the borrowing is on the joint venture company and not in the balance sheet of HPCL. That's one part of it. So as far as HPCL balance sheet is concerned, we have to contribute only the equity portion of it. For example, if we see the Rajasthan refinery project, which is around 40,000 crore, the equity contribution from HPCL is likely to be only 10,000 crore. So, and we have got our own projects in terms of our refinery expansion, that is 20 to 25,000 crore, and another marketing capex which we keep on doing. But at the same time, if you see, our debt to equity ratio has been quite healthy. Over a period, we have reduced our debt, long-term debt burden. The under recoveries burdens had not been there in the recent times, so that has also helped to reduce our short-term borrowings. So we are very comfortable as far as debt to equity ratio is concerned. Whenever we take up any project, we do see the serviceability of the debt and the long-term plan, and all the projects which we have taken have got an IRR which crosses our threshold limit. It has got a serviceability of the debt term. Our own threshold for crossing the debt serviceability, debt ratio, we are within that. And therefore, at the same time, company has shown quite some profitability in the recent past and will continue to do that. And therefore, I don't think that should definitely concern the investors. On the other hand, as soon as we commission our expansion plan of both Mumbai and Vizag refinery, in Vizag we will be adding up the capacity from 8.3 million to 15 million ton. It will improve the GRM of the refinery by almost $3 plus on the whole of 15 million capacity. So that will be a big jump for our profitability in the future. Of course, the crude prices, the product prices, the cracks are not something which somebody dare to forecast. But in the near future, we see that the trend of the healthy margins, depending on quarter to quarter, there are always variation, and that has been a trend and historic pattern in that. But I do not think that the people should be excessively concerned about our aggressive plans. The company has crafted its plan for expansion, and we will continue it profitably.